There's a couple different ways to use them. A lot of traders use them to try and trade in between, buy when it hits the lower band, sell when it hits the higher band. That's one way to use them. Another way
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Charles Schwab. I'm Joel Elconin, along with Dennis Dick, and also our special guest today is Anne-Marie Baiynd. She's an author and financial analyst. She heard the book that she has written is called The Trading Book Course, a practical guide to profiting with technical analysis. Anne-Marie, how you doing this morning?
I'm doing well. Always a pleasure to be here.
Okay, happy Halloween. I guess I got to ask you first. I know you have a bunch of little trick-or-treaters in your family there. What are they dressing up as?
Well, you know, all my kids are now at their high school age, and so they're too cool for trick-or-treating a little while, and, you know,
no little ones,
going to be hanging out with their friends, so.
Okay, all right. Hopefully they're not doing what I used to do on Devil's Night, trick-or-treating. So, okay. All right, so let's get right back. We got some crazy trading action. I guess before we go to the individual stocks here, let's just do a little general market talk. Wow, V-bottom in the markets on Ebola fears last week, and now snapback rally, just never giving people an opportunity to get back in. Were you hiding under your desk there in the middle of October there when we were getting back near 1800, or were you out there buying with both hands?
Well, you know, the thing about what was going on with the market, we had put up a chart of the SPX on the weekly and put the 50 simple moving average on there. And we noticed that it had been about 22 months since it came in to touch it, but every time it's touched it since 2012, it's bounced right off of it the following week. And it's followed the very same pattern this time around. Now, we're really expanding in a space, and you know, the topic is always how much energy do we have to push the markets this high, and we are expending a tremendous amount of energy coming off of that 50 simple moving average right there where you've got the wick right there on that bottoming candlestick. The base of that candle right there, the red candle that you got on your screen, is that 50 weekly, and the following week you picked up and moved up, but you can see those two massive green candlesticks. If you look all the way back to your November space, we really don't see any candlesticks big like that, and so that's always a space to have caution. It's the reversion to the mean or the snapback event. So if the markets continue, they're going to have a little pullback into a higher low, and it's going to punch over that top end and stay there. Otherwise, you know, we are looking at a space where we really, for the first time since July, have retraced significantly off of a last wave. You can see from that July dip down into August and then up into October, or up into September and then dipping down into October. That's a pretty deep, steep move. So we're going to be looking to see whether that V becomes a little bit of a W or something like that. So was I looking to hide under the desk? No. Was I expecting a bounce? You know, a small one. I did not expect this kind of bounce for sure.
Okay.
I don't think anybody expected this kind of bounce, and that's why you have this V bottom. Like, imagine, Anne-Marie, if you're out there and you're saying, oh, this Ebola thing's going to spread. I'm going to put some shorts on here. If you were shorting stocks a week and a half ago, there hasn't even been a pullback for you to cover. You're just completely underwater there. Or if you were in another scenario, a big portfolio manager saying, we need to lighten up because this could really spread, and this might have been the top. Now you're scrambling to get back into stocks, and that's why it seems like every pullback we get now here, they just come in, and the buy the dippers come in hard.
You know, I think you've got that spot on, because really there's still a lot of people that watched things rise from February and said, oh my gosh, I wasn't part of all of this, and they just are still in that, I've got to get in and have something here at the end of the year. So, yeah, I have to say I'm sitting in a space of, wow, I can't believe that this thing is actually going to hold. So it leaves me very tentative. It's the old story. The more you know about the market, the more cautious you are when things get into extreme spaces. And sometimes it works if you know nothing and you go, oh, yeah, all right, I'm going long. So,
what do you think here?
It's the age-old story.
What are you going to use?
Sorry?
What are you going to use for indicators up here? I mean, I like to diligently do my levels and look at the S&Ps and former all-time high at 2012.75. We've backed off there a little bit. Pre-market high. I mean, are you looking for a pause here before you try and call the top, or what are you using?
I am.
Yeah, you are. Okay, so you're just not hopping in the fray today. You'd rather, look for maybe a couple days of consolidation and then a breakout of a couple lows, so you're not getting real aggressive off the hop today then?
I'm not. And here's the big thing that I'm seeing. There's a lot of negative divergence showing up on these longer time frames. If you look at anything like the MACD or stochastics or anything like that, momentum continues to drift down as price drifts up. Now, a lot of novice traders will see that momentum drifting and they'll go, oh, yeah, of course it's going to be short. I'm going to short because I'm going to follow momentum. But momentum is never valid until price takes care of that problem. And what price has done, it's come down to test the bases and bounced completely off of it. So as momentum continues to drift down and price continues to shift up, the levee's got to break somewhere. And when there's that dissonance, I'm always extremely cautious about what I'm going to do. Today, if there's anything, I'm going to look at where the sideways action is pre-market. If it breaks that level, I'm going to short into the next level of support intraday, but I am not going to stake any positions, any space right now because I see price moving up and momentum moving down, and either of them can take hold and move ahead, but I don't get paid by momentum. I get paid by price, so I just got to wait it out.
Okay. All right, let's move on. Earnings, I think overall, I think Dennis will concur. Pretty good earnings season on the whole. A lot of seesaw action, and what about the action in LinkedIn? Is this something that you did a little earnings play on or not?
We did, actually, and what I've noticed is the market makers have had these earnings a bit off. They haven't been doing very well. I'm pretty sure they're scrambling a bit from the option chains and looking at the volatility that they build into price moves. Mm-hmm. The guys that we've been seeing have really, some guys are getting their hats handed to them, market makers. I'm sure of it, because they've just had it wrong. And LinkedIn was one of those spaces. Again, it's up here at, 220.50 right now. What we did was do a ratio. Normally we do a double back ratio. We'll do a 1/2. But we only looked at the call side because LinkedIn has a price-to-earnings ratio that is still really, really high. And sometimes that gets charts into trouble, particularly if they disappoint in any kind of major way. But these guys, of course, didn't. And now they are sitting up at what I think is the top level. What we did was take the 212.50 calls, and we sold twice as many of the 220 to give us a little bit of a credit if the charts did nothing. But now we're sitting in a very pretty sweet spot. It's over the 220, but only by $1. And so we've got quite a bit. We've got about $7 sitting from a profit space that we're going to be looking at here. But if you're looking at LinkedIn today and you're thinking about, wow, do I trade the breach? There's a lot of positive momentum there. It's very, very high. It's extended. I would wait for a pullback into support. before taking the position long if you're looking there, because it is really quite parabolic. Its motion is very, very high, and it's flattening out a little bit. You know, if you want to look at it maybe at 216 to see if it holds, rather than taking it up here at 221, that would probably be a more wise thing to do. And as it drifts off of these levels, because we've got the options expiring today, we're just going to close the whole position out for what it is that we've
I know
got.
what you're going to do, Anne-Marie. I know exactly what you're going to do. You're going to dump those 212.50 calls right away, okay? And you are going to ride those 220s and say, "Come and get me. Come and get me." That's what you're going to say.
Well, and you know, if that happens, I can always roll them into next week because it is hyperextended. So you are correct. That is normally my strategy. Spot on.
Well, congratulations. That's a great spread to have on. And, man, Brianna, why don't we have her on yesterday? We all would have had the 212, 50, 220 call spread on. But,
there you go.
We should have Anne-Marie on every day.
Every day. Maybe she should replace me and you.
You wouldn't be saying that if you'd seen me on the Netflix side, because
what happened on Netflix?
Yeah. Okay. I was short the 405 put.
Ooh.
Yeah. But guess what? I had the 415 puts because I had the same kind of back ratio, and I did exactly what Joel said there. I sold them, and then I've held on to those 405s and rolled them over, and I got to sell the sell the 415s for about $65. And so I just rode it right back up and, got out when it hit 384 or so. But it was hard. It was tough. Nobody would have been liking me then. It was bad. I was chewing on my fingernails.
Yeah.
GoPro, Anne-Marie, do you follow the GoPro there? It reported here earnings there last night, and they bought this thing right from the get-go. And the stock is trading up 15% here in the pre-market. Do you follow GoPro?
You know, I have been looking at them. I don't trade them per se, but, you know, 'cause they're priced, particularly around earnings, when you've got something that's that new and the price to earnings ratio, which really I completely ignored with Netflix, and that's why it ate my lunch for that short period of time. When I look at this, GoPro makes me a little bit nervous. You know, that it is moving up. It's great, but it looks like it's sitting at a double top event for the last maybe 10, 12 days or so. So I don't look at it, but getting to look at it a little bit more, because every time I talk to somebody, they're like, "Oh yeah, did you take a look at GoPro?" So yeah, it's definitely worthwhile, particularly as volume builds, because that's critical to me. It's got to have a lot of volume. Particularly my chains have got to have a lot of volume because I move around in them so much.
What do you think the market does from here? Like short term, looking, we've had such a rally here, and people are coming in today seeing the market just touch new all-time highs here again. Do you think we get this pullback here right away, Anne-Marie? Do you think there's going to be some resistance at those all-time highs here today, or is this just so much momentum it's going to blow through it today?
I'm going to say this. If it blows through it, it's going to pull back.
So you think either way we're going to get a pullback?
Supposition, yes.
Okay.
My supposition is that the momentum is too skewed for us not to have a pullback. The question is, how eager are the buyers to get involved because of the recent breach? If they're extremely eager, they are not going to pull it back down into that 1980-ish area that it needs to come back and retest for a while. They'll push it up again. But I really do not see momentum pushing these into new highs that stay. They've got to retrace. There's too much energy pushing it to the upside. And that energy's got to exhaust at some point. It's not infinite.
Okay, Anne-Marie Baiynd, author and financial analyst, joining us here on Benzinga's Pre-Market Prep, brought to you by Charles Schwab, talking a little options, talking a little overall market. Anne-Marie, it's great to have you on. You're a fun guest, and you have great information. We really appreciate it, and we hope to have you on again soon.
Always a pleasure. Good luck today, gentlemen, and thanks for having me on.
And you need to stop by the world headquarters now here that you're...
I do. I do. I actually looked up the address. I'm one step closer.
Okay. All right. We'll see you soon.
All right. Take care. Bye-bye.